Hi, happy Wednesday, happy hump day, turning point of your week. If you've made it this far, don't worry, it's all downhill from here. Thank you for tuning in to another session of FreightWaves Now, where we're bringing you what is happening right now. Coming at you live today, joined by market expert, the wonderful Wizard of Micheal Crosby, going to talk to us about capacity, volumes, what in the world is going on, and soon trying to help make sense of what the Supreme Court ruling is. We will be joined by Kevin Martin to give us a little more insight onto that dramatic ruling. First, Micheal Crosby. Welcome aboard again.
Thank you very much, Chad.
Now, I see you've pulled us up a blank map of the United States of America.
Absolutely. Well, just to make my point,
Outbound tender reject index.
Right, yearly change. So we've seen a unique year for 2019. 2018 was a strong year, but as we talked about previously this week and last week, the volume levels are up this year, even versus last year.
Yes.
In fact, just to give you an example, the volume that was coming out of LA last year, it's 80% higher this year than it was last year. 80%.
That sounds relatively dramatic.
Right, it is dramatic. So while volume has risen up, what I have is of course the carrier rejection. So this is the loads that are being rejected year over year. So if we're looking at the change, it's no coincidence that the 6 markets that are highlighted are these are the 6 markets that will be traded on our futures exchange coming in March. So we're looking, and right, so volume in Seattle is up, volume in LA is up, as well as Atlanta and Philadelphia, Chicago, and Dallas. But you would ask, why would the rejections be going down? It's because, here's the theory, okay?
Yeah.
We know that we have an oversupply of capacity, so that much we know.
Oversupply of capacity, and let me guess too, we have people trying to get ahead of the tariffs, and maybe some partial blame is the partial government shutdown.
Maybe.
Okay.
So the theory is that with an oversupply of capacity, which we're seeing, this is a direct result of supply and demand. We're wondering, are shippers being more efficient? Are drivers being more cognizant of, the watch that they're on?
Surely not to that dramatic extent.
Well, perhaps. On my next chart, actually, one of the things that we're looking at are the hours of service. So we have hours of service 11, which is the driving clock, right?
Yes.
This is the amount of time that they're able to drive. And then hours of service 14, which is the on-duty clock. So if you look at the green line from where we were last year and just kind of scroll all the way through until now, we're seeing about a 7.5 hours.
So the bottom one, to double check here, this is your HOS 11.
Right. Yes. HOS 11 is the bottom one,
which is how much driving time they have.
Right. And how much time they've actually spent driving.
Yes. And
so
the green line, HOS 14 is how much time they're allowed to be on duty.
Correct.
Okay.
So the utilization here is this is how much this is their on duty time. So this is the time that they're getting paid. They're getting paid by the mile. Okay. So you can see where we were about 6.3 this time last year, and this year we're up about half an hour, which is pretty significant, up to 6 3/4 hours.
Okay, so, that's a big shift, like a
pretty significant.
It's small, but
significant.
Those miles are hard to come.
Drivers are being monitored now with ELD mandates, and they're on the clock, so they're being more efficient in addition to the oversupply of capacity. So even though volume is rising, this is also attributing to the fact that, tender rejection rates went down again today. I think we're less than 8.5% nationwide.
That's incredible.
So the ball is in the shipper's court, as we said.
Yes. So I noticed that we saw the dip in December of 2017, but then for the most part we have a relatively steady line, but with a slight upward trajectory, and then boom, it's higher than it's been in quite some time.
Right. This chart is pretty volatile if you look at it like on a daily time frame. Okay. But overall, the trend is, a half an hour in a year is definitely significant. So that's part of the reason that we're thinking rejection rates are down
And are they being more efficient because they're being held accountable with those ELD things? Can't cheat on the logs, got to play by the rules? Or is that just another theory?
Perhaps. I mean, it's in everybody's best interest to, get your freight and get on the road. Maybe less lollygagging at the gas station or less chit chat. If you've ever gotten a UPS shipment, try to talk to the driver. He'll just say, and walk on. I mean, they
Right.
don't mess around. So I think everybody is being more efficient, and the pressure is on the shippers as well.
Well, that is what I like to hear. A very efficient, way of doing things and bringing it to you each and every moment. What is happening with volume, capacity, and hey, maybe everybody's just being a little more efficient. Thank you, Cross. Now we're joined by CLO, Chief Legal Officer Kevin Martin, making his inaugural debut here on FreightWaves Now to give us some insight onto, I think it's a blockbuster ruling of the Supreme Court ruling unanimously in favor of workers, independent contractors, in the ruling New Prime versus Oliveira. Kevin Martin, welcome. Glad to have you here.
Good to be here.
So is it a blockbuster ruling? What kind of ruling is it?
Well, it is certainly a major decision. I mean, there's no question about it. This is going to have an impact on the industry. It's going to have an impact on the carriers out there. Blockbuster, I'd probably step back from that just a little bit.
Okay.
But major without a doubt.
And well, give us some background. What were they ruling on? What are the implications? Who should be cheering for this decision?
Well, at the end of the day, this is an arbitration decision. This case is
Okay.
all about who can arbitrate versus who can take matters to trial, right? So employees tend to like to take things to trial, and companies tend to not. That's why they put arbitration agreements into their employment agreements, or in this case, an independent contractor agreement.
Okay, and that's why this is in favor of the worker.
Yes.
Yeah.
Yeah, and that's to some people's surprise. So for the last decade, the Supreme Court has been very inclined towards sending matters into arbitration and been seen as company friendly. So for this to be a 8-0 decision, Kavanaugh had not yet taken his seat on the bench when this was argued, so he took no role. It's an 8-0 decision. It's in favor of sending it to the courts as opposed to arbitration, and that surprised some people. But I don't really think it should. There's a lot of politics that sort of go into that. The liberal justices got the opinion they wanted, which was making sure that this gets into the courts. And the conservatives used the language in here to back up future opinions. This is very linguistically based, which is what the conservatives like to focus on. They like to focus on the words. They like to focus on definitions. And that's what they did in here.
From the 1925?
Believe it or not, this case really turns on 1925 Webster's Dictionary. At the end of the day, pulling out Webster's Dictionary 1925 version, that's what decides this case.
Wow. Explain. How so?
So the case comes out of the Federal Arbitration Act. Federal Arbitration Act is a 1925 act, and they use a term in there, a contract of employment. Now, modern legal mind hears contract of employment, they think employee-employer relationship as opposed to an independent contractor relationship.
Okay.
The Supreme Court didn't care about the modern legal mind because the modern legal mind didn't write a 1925 statute. They wanted to look in the 1925 mind. What was Congress thinking in 1925 when they wrote this statute and used the word contract of employment? So they pulled out the 1925 dictionary, they looked at some other 1925 statutes, and they said employment, contract of employment is contract for work. They were interchangeable terms in 1925, so they really didn't care whether it was a contractor arrangement or an employment arrangement. To them, it was all the same in 1925, and that was the turning point in the statute.
Interesting. So, to some extent, that seems to explain why both conservatives and liberals on the Supreme Court could get on the same page with the ruling. But what I'm curious about, and what I think a lot of our viewers are probably curious about, Kevin, is well, who should be celebrating this? Should owner-operators be celebrating this? Should major fleet carriers be celebrating? Who should be disgruntled and who should be celebrating right now?
So I would say those that should fear this decision are those that have been using arbitration to hide, right? That people have been signing independent contractor agreements, with an arbitration provision and using that to avoid the Fair Labor Standards Act. When it comes up, they take it to arbitration, they settle this one suit, and they continue to ignore the Fair Labor Standards Act because it was cheaper to settle this one case and move on, right? So as this case comes in and says you're not going to arbitrate anymore, you can now take these to trial, that now opens up class action litigation. So those that have been hiding, those that have been working on the fringes and not paying workers perhaps what they should be paid under the Fair Labor Standard Act,
right,
they should have a lot of concern about this case. The other group, and so, it's kind of hard to be sympathetic, right? How are you sympathetic to the company that's not properly paying their people? That sounds like not a very sympathetic group, right?
Right.
But there's another
those
group,
not playing by the rules.
right? And those are definitely in a lot of trouble with this decision because they're going to get class action litigation, they're going to lose it, and it's not going to be pretty. The ones that you got to have some concern about are those that are more on the line. As far as are they an independent contractor, are they an employee, and it's sort of a fine line there. Those people have to be concerned because there are people who make their living in class action litigation, even if it's frivolous, right? Even if you don't have a strong case, they know that companies fear class action litigation. And this gives them the potential to get a foot in the door. And even if you've been operating in a clean manner, my independent contractors are over here and I'm paying them like I'm supposed to, and my employees are over here and I'm paying them like they're supposed to, there's still the potential for abuse of the class action process, which arbitration kept you out of before, but now that door is open.
Okay, so that's a broad way of answering the question. But bottom line, most owner operators are also often employed as independent contractors, right? So shouldn't they be happy with the decision, unless they have perhaps they also own some assets and maybe don't treat those employees right?
Yeah, no, I think you're right. I mean, on that side, I think you're right. I think owner operators should like this. Even if they personally are not being treated poorly, right? The companies that benefit from paying substandard wages, substandard meaning sublegal in this instance, they're benefiting and pulling down the market wages, right? So if you take out those that are paying sublegal wages, you should be pushing up from that perspective the market wage. So there should be an upside. How apparent that'll be, only time will tell.
Okay. And I would think that more often than not, huge fleet operations, they might be vulnerable, I suppose, but they also could absorb the cost because they're at scale. Could you unwrap that a little bit for me?
Yeah, on the large fleet side, they've got a couple of things going for them. One, being on the large fleet side, you've already got a legal department, you've already got a compliance department. You've probably tried to stay away from that fine line between independent contractor and employee.
And you're under a lot of scrutiny.
And you're under a lot of scrutiny. You're heavily regulated. You always know there's the threat of litigation out there. So you've tried to cover that base already. So hopefully that doesn't expose you. And then when you step over to the more frivolous side of it, you then have the resources to defend those things. It's when you get down more into the mid-size and you're trying to comply, but maybe it's been a little tough, and then you don't have the resources to fight the frivolous cases. That's when your future gets a little more concerning under this decision.
Okay, so while there is a lot of possible justice for independent contractors and basically workers' rights, I'm wondering too, though, if we will see rising costs to the consumer because they simply have to be paid more and you can't skirt around the law as much. Is that a fair assumption? Like that us consumers might see rising freight costs, and therefore we'll ultimately absorb that.
I think you'll have a tough time teasing that out, right? That is a macroeconomic event. This is one Supreme Court decision.
Right.
It revolves around purely the arbitration decision.
Just arbitration.
And that's why I take this out of the blockbuster category.
Gotcha.
Because you can still defend under the Fair Labor Standards Act. Under this decision, New Prime doesn't have to pay anybody. They haven't lost anything. The only thing that's happened is the plaintiff here, Mr. Oliveira, he has earned the right to go to court. New Prime hasn't lost yet. New Prime can still step in and say, fine, we're in court now, and here's my contract with Mr. Oliveira. Here's why he is an independent contractor and not an employee. And the court could still come in and say, you're absolutely right, and dismiss the case. And New Prime, well, I'd say no worse for wear, but arguing a case up to the Supreme Court's not a cheap proposition. So
Right.
they're certainly worse for wear along the process, but they could still win the case.
Wow. Well, thank you so much. Great to have you on board. Appreciate that insight. And so maybe not blockbuster, but a major decision, mostly though involving just the arbitration kinds of cases. So interesting stuff, bringing it to you here each and every day on FreightWaves Now. My favorite time of the day. Please tune in as often as you'd like, because we have a nice little cadence going each and every business day. 4 o'clock, check us out. We're also on Twitter, and you can find us on FreightWaves Now or FreightWaves.com. And you can find us under the FreightWaves Now section. So stay tuned, and don't worry, be happy.